Hello everyone, this is Abhijit Chatterjee and Rohan Singh recording our weekly session for the week of June 17th. Today is June 21st. Today agenda, we're going to talk about something very exciting happened in the market, talk about the top $3 trillion stocks. Microsoft was the leading stock, followed by Apple and Nvidia. And then this beginning of the week turned out to be quite an exciting part where Nvidia took over Apple and Microsoft, climbed to be the topmost market cap stock. And then as of Tuesday's close, it was the largest market cap, over $3.3 trillion. And then we had a Juneteenth holiday on Wednesday, and when the market opened on Thursday, initially it shot up even further, Nvidia climbing almost up to $140. And then there was literally a 10% sell-off where it kind of tanked to as low as $124, $25 today. So we know that there was a quadruple witching week. So the, in terms of options expiration, also today turned out was index rebalancing. And in particular, the SPDR technology index, the XLK, had a rebalancing. And as you can imagine, the three key stocks in there, Microsoft, Apple, and Nvidia, kind of had to rebalance the number of shares based on their market cap because it was a market cap weighted index. So the fact that Nvidia was, as of Tuesday, the topmost market cap stock, a ton of buying happened. And Thursday, after the initial spike up to 140, turned the parts of the gods above, decided that, you know what, perhaps Nvidia shouldn't be the top market cap, it should be Microsoft's turn instead. And that's exactly what happened. So we can look at an hourly chart, we'll see how the market moved. And turned out that Nvidia took a beating. It sold off into Thursday with the bearish engulfing candle, and then into today, the selling continued, while Microsoft gained, and we gained with heavy volume. So buying rebalanced money that was initially moved into Nvidia back into Microsoft, and Microsoft took over as the, call it the largest market cap stock, over 3.3 trillion. Apple was fairly close to Nvidia at number 2, at somewhere around little over 3.1, maybe 8 trillion or so, and Nvidia was about low 3.1112 trillion. So that's where the market ended. So we're going to talk about that. We're going to talk about our usual sector and core ETF analysis for the week. We'll also look at, after we look at the 3 key stocks, not just from an hourly trend, what happened this week. This is a shortened week, of course, with the Juneteenth holiday on Wednesday. We'll also look at the daily charts to get a better idea of where we think these 3 stocks are headed. And then we'll look at Gamestop, which has been always a story stock, something of tremendous interest to Reddit as well as Robinhood retail customers. There was an interesting article today actually about Robinhood customers doing quite well, beating the markets. We know that S&P has climbed something of the order of 15% for the year to date, which typically S&P on a yearly climbs, is a multi-year average at about 10 to 11%. So it has actually exceeded it this year, climbing. It's been an election year, has been bullish and positive. It's 15% for the week, S&P 15.8 or so. And Nasdaq-100 QQQ has climbed over 18%, 18.8%. That's been leading. So retail investors, as Robinhood quoted, have been investing heavily on the Magnificent 7 stocks, which, as you know, has got the top 3 market cap that we talked about, Apple, Microsoft, and Nvidia, but also Google, Amazon, and others. So we're going to look a little bit about Tesla. Tesla has unfortunately not done too well, but that is by far the biggest holding for the Robinhood customers. So we look at how Tesla stock is behaving, which we feel is potentially set up for a breakout. And if any, the SPDR or the industry select SPDR that Tesla and Amazon belong to, which is the discretionary XLY, looks poised for a breakout. So we feel that there is a good chance into the month of July, should look into Amazon and Tesla is outperforming. And we know there's a very big event for Tesla coming up with their robo-taxi launch around first week of August that Elon Musk has already committed and promised the shareholders. And of course, recently he had his pay package approved by shareholders, and that was also a bullish outcome that helps Musk be motivated with Tesla and try to do his best to try and get the company meeting all its objectives. And then towards the end, we're going to just look at, just in terms of overall what the market is looking like, and end it with that. With that, let me share my charts and start looking at the market. Let's go full screen here. So let's start off with our blog site. Charts are found at substack.substack.com. If you go to archive here, you'll see all our daily blogs this week. Though there was a holiday, 5 blogs were published, one every day. Talked about today's one was about the Dow Jones Index, why I feel that it's set up for more upside. I know it has been underperforming. NVIDIA is not a part of the Dow Jones Index. So as a result, it has not been able to lift it as much as it's been able to lift the QQQ or the Nasdaq-100, or for that matter, the S&P 500 index. But there is a good chance that Nvidia could replace Intel. Not sure when they'll do it. That's part of the reason why they did the 10:1 split. A $1,200 stock would have been hard to add to the index because it's a price-weighted index. The index managers, S&P Global, wouldn't have added it at $1,200 a share. But now that they've done the 12:1, they're going to float around the 120 to 140 level, and it's a perfect price. Would be right in the midpoint of the Dow stocks to be added. So there's a good chance Intel, which has been struggling, not growing as expected from a blue chip stock, and also in the chip industry, NVIDIA has absolutely proven its worth, way leading, not just NVIDIA, not just Intel, AMD across the board. It's the leading chip sector stock right now. So NVIDIA is a good chance, and being the stock of the future with AI driven a lot of the future growth of the economy, NVIDIA would be a perfectly great addition to the Dow Jones. So there's a possibility that that could be coming, and that could perhaps help Dow Jones. And the upside target on that is somewhere around 42.7K. We are right around 39.6 or 7K. So we get another 3K climb that could easily come in the next couple of months. So I think there's a good chance we should watch out for that. We had a blog about European stocks, the 5 core largest GDP economies there, starting with Germany, France. They had shakeups with the Eurozone election. The Euro Parliament election turned out that the far right, extreme right seats got some seats, shook up the market in general about their extreme behavior being more inducive to policies that are not market friendly, and so they did take a kind of a bit of a sell-off, but looks like there is some upside because Europe in general has a much lower price to earnings multiple than S&P. S&P is selling anywhere from 20 to 21 versus Europe is 13.5 to 14. So it's about 35% lower price earnings on Europe. So there's potentially some upside. So it's a good chance if you're looking into buying the Europe ETFs, and they do have MSCI ETFs like EWG for Germany, EWF for France, and so on. You might consider looking at it. That was what that blog was. We also talked about India and Mexico. There was some CNBC articles and videos about being a safe haven for the emerging market. Looked at those 2 charts, and both look recently upside. India, however, I would wait for a pullback. It is already at all-time highs. The Nifty index, which is the blue chip index, is already climbing and pretty much at its highest level. So I'd wait for a pullback there. And if you do get this run, I think right now around 23K or so, about 23.5K or so. But if it does get a pullback and we get a 21 handle or lower, that would be a perfect place to get into Nifty. And then the obesity market, we talked about Gilead. It's kind of a contrarian play. They have a kind of a drug in that space, in the GLP-1 space, that has potential for bringing upside to, which is kind of a pharma that is more on the call it the value play. It has been around for a long time as leader in HIV drug, more than half their revenue come in there. But if it does get a crackdown on GLP space, it could help catapult the stock higher. So that was something we had looked at. And then QQQ, we were talking about where could the QQQ be added earlier in the week, and we did get a little bit of pullback because of the Nvidia pullback, and just the overall shakeup between Nvidia, Microsoft, and Apple this week caused a bit of a QQQ pullback. So, and then we do publish all our weekly videos at Charts Are Fun. That's our YouTube channel at Charts Are Fun. We strongly encourage you to subscribe to this channel, and if you like the videos, we could hit the like button. It helps us get into the YouTube algorithms so that it can be shared with a wider audience. We really appreciate your time and interest in watching this channel. So with that, what I'm going to do is I'm going to start talking about what happened in the core index ETFs. So these are all sorted by a rate of change of 4, because this week was a shortened market with only 4 trading days, because Wednesday was a holiday. So if you do the 4-day rate of change, the biggest movement happened in VIX. Actually, VIX moved up 4.27% for the week. It has, however, kind of closed today. We see a red candle for today, but it's kind of setting up as a bit of a cup and handle move from somewhere around 11.5 to 14.5. So that's a 3-point move, breaks above 14.5, that could go to 17.5. So something for us to watch. End of June tends to have some doldrums, market moving lower into July. There's a possibility into early July for the next couple of weeks. If you do get a pullback, this could perfectly set up as a good buying opportunity if it does happen, if VIX does shoot up to 17.5. So this is something I am watching for next couple of weeks, is if this turns out to be that cup and handle where VIX does break above 40. We can see that, in this case, the moving average is the 20-day and the 50 days in red. If it does break up above the 50 and crosses 14.5, that move to 17.5, 18 would be a perfectly good place for to go long on some of your favorite stocks. The Dow Jones Industrials ETF, Diamond, DIA, did quite well this week, up 1.48%. This is something, as I said, I have been watching. I feel there's more upside on this, something around the 42.7, which would be 427, 430 on the DIA kind of ETF, the Diamond ETF. So that's something to look at. Emerging markets get a bit of a pullback. Dollar has been actually trending higher. That dollar trending higher, a strong dollar doesn't help the emerging markets. So in some ways, that's something that you got to look into. But emerging markets, after a pullback, would continue, perhaps resuming its uptrend, something to look at. Small caps have been kind of, forming a consolidation pattern, call it this as a handle, after forming a nice cup from the low 190s to the 210 level. So that's roughly 20 points. So that breakout above 210 can get it easily to 230 to finally test its 2021 highs. But till then, you could say that in many ways, this was a cup with a handle forming. Definitely watching this to see how the consolidation kind of holds, doesn't go back and retest the 190s, kind of holds around this 198 to has been kind of support, and then from there can break higher. So it's something we're definitely watching to see if small caps do start outperforming moving into July, while we get the large caps take a little bit of a breather. S&P 500 has been extremely well, climbing higher highs literally all of June. Since the pullback in May, it has been doing extremely well. Got a couple of days pullback because of Nvidia, because Nvidia has got a big chunk. In fact, over 33 or 34% of S&P 500's move this year literally has been really powered by Nvidia. Nvidia, if you just imagine its move, I think moved up over close to $900 billion in a span of the last 6 weeks. It's been just an absolutely outstanding climb. And hence, from somewhere around just about 2.1 to 2.2 trillion, it shot up, or 2.3 trillion shot up to 3.3 trillion literally in the span of the last couple of months. It's just absolutely amazing. Dollar is something, the UUP, it's an ETF that I am watching for a bit of a cup and handle. So somewhere around the 29 to the 28.5 level. So that's the cup. We had a couple of days of pullback and then a breakout today. It has been coasting higher, close towards 29.1. My target here is 29.6 near term, just based on this cup and handle measurement between 29 and 28.45 or something. So that breakout to 29.6 is what I'm watching. So if the dollar does coast higher, it tends to be a bit of safe haven buying, that it could correlate with the market pulling back. So if the next couple of weeks, VIX breaks above 14.5, starts climbing towards 17.5, 18, we could, and the dollar climbing past 29.10 towards UUP towards 29.6, we could see that with a bit of a market pullback, and S&P could pull back, test its rising 20-day moving average, so somewhere around the 530, 50, 5350 or 535 for the SPY, the ETF for S&P 500, or if you get a bit of a deeper, maybe at the 50-day, which is climbing, both the 20 and the 50 are climbing, maybe towards the 520. So you got to see that. QQQ did have a couple of days. It has also had an outstanding June, climbing from the pullback from the late May, and from somewhere around 443. Now, this is also, I'm going to show a little later, a pullback that measured a breakout from 443 that measured somewhere closer to 443 to 465, was about 22 points at that to that 465 is 487. It came very close to 487, 486.9 this week, and from there it pulled back a bit. So it's possible that we could get a 20-day moving average test on QQQ towards the 465, 470 level, which would be healthy, and then resume its climb. The reason I believe QQQ will resume its climb is that my target on that is 520. Still got some more upside on QQQ, and I wouldn't just give up on it yet. Now, silver and gold are, as we know, safe haven buying. If the dollar is going to coast higher, as we've talked about, this cup and handle on UUP, I can expect some downside. So we did see that there was a pullback in silver today, pullback in gold. So expect a little more correction. Eventually, they will get a bid, and I expect them to climb. But for the time being, this could setting up as a good buying opportunity for those looking into precious metals, silver and gold in particular. So that's something looking into. And maybe a pullback to close this gap right around 24.5 in silver would be a good buying opportunity. And maybe GLD pulling back towards the 200 or 210 at least at the minimum would be a good buying opportunity. I think GLD's target for mine, from what I've looked at, is 236. SLV's target, I expect it to be closer to 31.632. So there's upside on both of these, I believe. And right now, it's setting up. As you can see in the pullback, the volume has not been as strong. So this is basically a consolidation going on with an opportunity to buy when the dollar hits its target. If it hits its target 29.6, I would just come in and buy up GLD and SLV to play their upside. And I know that with the election uncertainty as it climbs towards the last third quarter, the last few months of the election, going to August, September, October, you can expect with uncertainty to give silver and gold a bit of a boost in safe haven buying. Treasuries TLT has done quite well, actually. It has climbed outstandingly well through the late April through the June timeframe. Which is quite interesting. Usually TLT is inversely correlated to the market. When the market does rally, TLT pulls back. But in this case, it's turned out that the interest rate expectations that people have been thinking that Fed was extremely hawkish and maybe there would even be only one cut and so on. TLT has actually come back. The inflation this month has been shown to be taming both on CPI and PPI, and markets liking it. Market believes that we will get the cut, and Fed is kind of signal that there's going to be cuts for sure, perhaps 4 cuts next year and maybe 1 or 2 cuts this year. Market still thinks that maybe that's what's friendly. TLT is liking it, and hence if there's cuts, TLT likes cuts, and that's how it's an ETF on 20-year treasuries. So that's why TLT did quite well. But then we're kind of hitting resistance now, the 95, 96 levels. I wouldn't be surprised. It closed in 94 today, but I'd be surprised to see a bit of pullback on TLT to test its rising 20-day near 92. But if that is a cup and handle, then that could be very good, because from 87 to 95, that's 8 points. That goes back to 103. That could be a very strong move in TLT. And that could happen if you do get finally the cuts coming in, and 10-year yield, which has been holding 4.2 quite strongly. It's been very strong support. It had touched 4.73 recently. It's pulled back to 4.2. If TLT does break above 95, then you can expect 10-year yield to be back below 4%. And that would be good for stocks. Though there has been a big discussion among the Wall Street pundits that, if you do get pullback in treasury yields, this is not as such for market plainly. It could mean that the economy is getting weaker, and hence the treasury yields are coming lower because of weakening economy, and that could actually not be so good for stocks, because right now economy is kind of holding okay and reasonably well, but the job market starts weakening and the the core indicators of the economic GDP macros start weakening, then perhaps Fed may come in and start cutting rates just to help the economy not start weakening further, and that could maybe a bit of a reason for the market to sell off, is what some people are thinking. Bitcoin has actually been still in a very, very wide range between this GBTC is one of the proxies of Bitcoin, looking at the biggest ETF, but here it's been trading in a range between 50 and 65. However, there's a possibility that we could be effectively not retest the 50, might just be forming a kind of a bit of a right shoulder of an inverse head and shoulder. You could say that the neckline is around 65, the left shoulder is from 65 to 55, then from 65 back again to 50, back to 65. Getting that pull back towards 55, it closed at 57, a couple of points more downside, could be a good buying opportunity. I think Bitcoin may be worth looking at, because you can see these pullbacks, there isn't much of a volume. This initial climb, of course, beginning of the year was the huge ETFs. 9 new ETFs got launched, tremendous amount of buying interest in Bitcoin. Since then, it's been kind of in many ways, you could call this a bullish flag. This is the flagpole, and then this is the horizontal flag. So a breakout here is actually very bullish because GBTC breaking above 65 measures to 80. So you can see 50 to 65 is 15 points. At 50 to 65, that's 80. So that's a decent upside if you do get that. So with that, let me start sharing the sector charts. And this week, the discretionary did very well, and I talked about it, and I will be actually sharing some key stocks that move the discretionary, in particular Amazon and Tesla. I'll share both the charts, and I'll see why I do believe that there is a decent chance that there's more upside coming in XLY. One part of the measurement is from below the 170 level, like 168 to 180. That's a 12 point. Add that to 180, 192. So this is a bit of a cup and a handle breakout. It's already past the 180 and now towards 182.5. It'll find some resistance at 185, maybe get a bit of a pullback, but then from there, I expect it to keep climbing higher. And we see that there's also already a silver cross, the 20 above the 50. 20 is already climbing, and 50 is kind of turning, kind of basing out, and maybe beginning its climb again. So this could have turned out to be a bit of a bearish trend reversal, but as in when the 20 went below the 50, 50 started declining for a bit, for a couple of months, but now 50 is basing out, could start climbing with the 20, and we could see some upside in the discretionary. That could come with interest rates coming down, because discretionary is when people kind of buy stuff that they need. There's a question of need versus want. Need is when you absolutely buy staples. These are things that you need from your day-to-day. And want is where you ideally would want, if you had this discretionary spending, if you had the extra income to be able to buy stuff that you want. And so it's possible that with interest rates coming down, the Tesla cars selling could get a boost. You could get more selling and buying out stuff from Amazon. Amazon's already cut down some prices, so has Walmart. So it could help boost the retail spending, and that could help these discretionary spending to start going higher. So that's, and a lot of the retail stocks, by the way, fall in here. The Apple stocks we know have been doing extremely well. In particular, Gap had shot up, it's pulled back. I think Gap's actually setting up as a great buying opportunity in discretionary, has pulled back from 29 down to 24. I think anywhere 24 or lower is an absolutely excellent point to buy Gap. I think it's going to hit 29 and go above 35 or so. So absolutely, it's another great discretionary buy. And I'll talk about Tesla and Amazon shortly. Energy, I had posted a blog last week, I believe is setting up as a contrarian pullback. I think XLE has upside all the way up to 115, 120. This recent pullback, I think, has been a nice consolidation. And I'm not as bearish on energy as many are. I think the world overall has become suddenly very bearish on energy. I think there's a good chance that it recovers, breaks above the 97.5 previous highs, and breaks above 100 this time. So looking at energy as a contrarian play when most people are ignoring it, especially as oil prices have gone up a bit, energy stocks have been coming down. You can see from that peak towards early April, that's when we perfect time published a blog talking about is energy stocks getting ready for a pullback. If you look up our chartstart fund substack.com, you'll see a blog there. And from the last couple of months, we exactly got the pullback, but now I think it's setting up for a great reversal from here to start moving higher. And financials have actually also kind of had a bit of a double top, we thought, but it may not actually be a double top. It may actually be a cup of an handle. So from somewhere around the 39.5 to the 42.5, that's a 3 point, 42.5 to the 45.5. So this is the cup, bit of a too deep for a handle. The handle should not go more than 50% of the cup, but this with a bit more than 50%. But it's kind of, if it holds the 40.5 and then continues moving higher, then that could actually be good. The reason financials pulled back was the fact that the 10-year yields have been coming down. Financials prefer higher yields. It helps them with a net interest margin. But then, if we do get Fed coming in to help bring in some liquidity to start, the banks definitely benefit from liquidity. So there's a possibility that could help them. And of course, if interest rates come down to a bit, the home buying may increase. There may be more loans that retail investors start taking. And the commercial fear, right? Commercial banking fears, if the interest rates come down, it helps them with their fears of rate adjustments that have to happen this year. So that could be good for the banks. Industrials have actually been in a flag pattern. This is a beautiful flag pole right here from the 110 to the 120 128 or 29 level, pull back to the 120, back to the 129 or 126 actually is where this is. So flag from 110 to 126, that's about a 16 handle flag. From there, you kind of got a pullback to 120, and now this is where the flag is forming between 126 and 120. So the break above that, you could basically take that 16 handle, add it to the breakout near 126. That would effectively go to 142. So with we know that infrastructure spending is a big item for government. US needs it, and this could continue the bullish run on industrials. Commercial communication services, the internet stocks actually, not the internet stocks, this is where also you have the telephone companies, whether it's T-Mobile, Verizon, or AT&T, and so on. This is a beautiful cup and handle for sure. So there's a cup from somewhere around the 83 to somewhere near the 76. That's a 7-point cup with the handle right here, and then the breakout. So 73 plus 87 plus 83 is 90. So we're right now 85. I think there's more upside towards the 90 is where this is headed. So I still remain bullish on the communication services. XLP staples also had a pullback recently, a bit of a consolidation, but I expect this to break out above 78 and resume its climb. My upside on this is somewhere around 80, 81. So you can already see from 76 to 70, there's a couple of points. So that breakout from there could take it to 80 is what I would see for staples. Basic materials, of course, has been pulling back. This is where copper, aluminum, even the gold, silver fall all under here. With dollar doing well, they inversely correlated, they do get the pullback. But once we do reach the target on UUP at 29.6 and then start selling off, I think basic materials will get a bid. So this is also in many ways similar to the industrials, a bit of a flagpole. So this is the flagpole from 81 or 80 to 93. So that's like a 13 handle on the flagpole, and then a flag forming between 88 and 93. So a break above 88. Break up of 93 with that 13 handle takes it to 106. So there's a good chance that if this is the flagpole, flag and bullish flag pattern after all, then that breakout would take it much higher. Healthcare is a beautiful ascending triangle. You could say the base is somewhere around the 147 level, pull back to closer towards the 138. And from there, if it breaks out, at 138 to 147, is right about 9 points. At that 147, it's 156. So I think XLV is setting up for an ascending triangle pattern with higher lows. The base at the resistance level at 147, and it closed near 147 today and was up 0.63% for the week. And technology didn't do as well for this week, partly because of the last couple of days of Nvidia pullback being one of the largest weight on XLK, along with Microsoft actually did recently well, but in particular, Nvidia shuffle between Microsoft and Nvidia. Nvidia's pullback brought the index XLK down for the last couple of days. And as a result, overall for the week, this is only a short week of 4 trading days. It was up 0.15%. And then the real estate was down for the week, down at almost unchanged, minus 1.4%. This one also, I do believe, is an ascending triangle, somewhere around 35 to 39. A 4-point to 39 is 43. That's where I think it's headed. Why ascending triangle? Because this is just the base of the resistance level at horizontal line near 39, and then the lows are climbing, and so that's kind of the ascending trend line on the lows. So if you break that up, 35 to 39, 4 points, add that to 39, 43. So I'm looking for a move to XLRE to 43 if that happens. And then utilities has pulled back. In fact, among all, this one pulled back quite steadily. It was trending very strongly for the months of April through late May, and then the pullback came, and that's when the 20-day started declining. It was climbing and then started declining. The 50 is still climbing, which is bullish, and it's successfully testing the 50. When you have a successful test of a climbing 50-day, that's usually a bullish sign where the resumption of the primary trend could continue. So it's possible that we could get, again, utilities get a bit of a bid. In fact, the next couple of weeks, if you do get a market pullback, you could see the utilities catch a bid because they tend to be inversely correlated to the growth stocks. These are more where the value stocks are. So there's a possibility for that to happen. One key thing I am watching from a broader perspective of the market, where I think that if QQQ reaches 520, I would lighten up and go a bit into cash. I would not expect much more upside beyond that, is this warning sign of lower highs in the bullish percent index of the NDX, which is the Nasdaq-100. 90% of the Nasdaq-100 stocks were, so 90 of the 100 stocks were bullish in terms of the bullish point and figure charts in mid-December. With every successful peak in the market as QQQ is climbing, it turns out that the BPNDX is getting lower and lower, weaker and weaker. It did pull back quite a bit in that April because we had got a sharp pullback of QQQ towards the 413 level. And from there, from 449 to 413, when that happened, the bullish percent had dropped to 23. Since then, it climbed quite strongly back to 62. But guess what? It has not been able to take out those previous highs. 62 came back to 39, but failing right now at a 59 level. With the way Nvidia traded this couple of days, I do expect more pullback on QQQ, Nasdaq, technology stocks next couple of weeks, and that could mean that this could be declining again. I'm going to watch. Is this going to set up a lower low from 39, or is it just got a little bit of that and then maybe come back and keep declining in a weaker trend on the bullish breadth of the market? Another breadth indicator is advanced decline line stocks combined in terms of total advances minus total declines, and that's the summation index. And turns out that that's also been dropping as much as from its at a lower high. The higher high was also towards December of last year, 511. It's been weakening. Minus 467 came back to a high of 54, much lower high than the 511, and now is at minus 348. RSI is below 30, near 21. This can get much weaker. RSI and the BPNDX, Nasdaq Summation Index, McClellan Summation Index sometimes goes to single digits. So we could continue, but I feel we will go lower in the next couple of weeks as the market continues. I think NASI will, to the point when NASI starts climbing, that's usually an early sign. That's what happened in the April pullback. We see that the NASI got oversold and then it started climbing, and that was an early sign to start looking at buying QQQ. So now for those that are looking to get into QQQ or have done some covered calls or some hedging, we should wait for QQQ for this summation index to start kind of bottoming out, and this may get even more deeply oversold like previous time. And then once it starts climbing is when you start seeing an early sign of a few weeks of movement up in the market. And as I said, QQQ in my mind is still a target of 520, and that's where I see it headed. So near term, I said it did meet a target, and this is my hourly chart of QQQ, and 443 to 465, that's a 22-point move. 465 to 22 is 487. It came very close, 486.86, 486.84, tested it twice this week on Tuesday and then on Thursday, and then on the double top breakdown with a lower high on the RSI, that's classic negative divergence, it broke down. So that breakdown brought it down to test the 20 period moving average, 481, to 20 to the 50 moving average, for say 479. And since then it rebounded a bit. I think this should kind of break down beyond the 478. So 478 to 486, that's about an 8-point. Subtract 8 from 478, that's about 470. So I expect a move down to 470 in the next couple of weeks, and that could perhaps be a great, unless the market turns out to be just bullish and takes out 487, then in that case, of course, we are off to the races towards the 520 level. But I expect with the way Nvidia traded, that there's a good chance that we might get a pullback, continue from what we saw the last couple of days. This hourly chart, by the way, every candle is an hour, so this is just the last 2 days of trading. So we closed near 480, but I would not be surprised to see it close towards 470 in the next couple of weeks, which could be a good buying point for strong technology stocks when that happens. Nvidia, we talked about, as we always have heard, that the market climbs in a escalator and comes down in an elevator. This is a classic elevator drop from 140 to 124. That's a 16-point drop, more than 10%, literally 11% drop in just a span of the single day. Intraday in the morning on June 20th, yesterday, Nvidia opened 140, above 140, closed 140.76, and then fell, selling actively throughout the day, and ended closer towards the 131 level. Today, early when it opened up in the morning, gap down. So further selling, a little bit of buying, but not as much volume in that buying, and kind of hanging out there in the close below 130. 126. Now, as I said, this is, of course, max pain. There was a ton of calls that were outstanding on Nvidia. Money managers had to shake the call buyers down so that it was max pain for them, so that their calls started expiring worthless. And guess who were on the other side of the calls that they bought? The money managers, of course. They had sold those calls. They got to keep the premium. They didn't have to lose the shares as a result because those calls didn't get exercised. And at the end, things balanced out. They made a killing. So classic smart money trade, and that's exactly what happened. A max pain kind of a trade. Nvidia was way outsized number of calls, and as a result, that euphoria helped die down as the market pulled back, and that's what Nvidia. Now, Microsoft and Apple, interesting enough, have actually been quite bullishly aligned. Microsoft in particular has a nice cup and handle from the 387 to the 433 level. That's roughly, you're talking about 46 points. At 46 to 433.6, that's closer to 479, 480. So it has touched 450.94. Closer to 450 today again. I expect another 30 point on Microsoft. So maybe if the market does correct, if Nvidia, if QQQ comes down to the 470 level, as I'm thinking, you might get a bit of a correction in Microsoft, but I think it's headed towards 480. So there is more upside on Microsoft. And Apple, interesting enough, had a beautiful cup and handle as well. It had really not done too well the first few months in this year, especially from February to March. There was fears of Chinese slowdown in iPhone buying and so on. But then this part here was all driven by the expectations of the Apple's intelligence, their AI launch. And then it took off on the day after AI launch. And from there, we can see that this breakout from 163 to 193 is a 30-point well, closer to 29 points, because 163 to 192. So add that 29 point to 192, that measures to 221. It didn't exactly meet 221, but came very close, met 220.20. So that's Apple. It almost met its target, and then it kind of started selling off. I wouldn't be surprised to see it not probably go back to 193 again, but maybe previous high at 199 or 200, maybe very strong support. So pull back towards the 200, and then it could resume its climb is what could happen. Nvidia, we talked about the hourly, but if you look at the daily chart, this is where we can see this classic, just I've been talking about this bullish flag pattern. Similar kind of bullish flag pattern in Nvidia that just exactly panned out. So 47 to 97 is the size of the flagpole at 50. The flag then happened between 97 and 75, and then it broke out from there. If you see the gap breakout point is somewhere closer to 90. So add 90 plus 50, 140. This is exactly where it tested. So it met its bullish flag pattern and started pulling back. Decent volume in the last couple of days of selling. I wouldn't be surprised to see this pull back some more, especially in the parabolic way in which it has climbed. 125, 126 is support, is where it kind of closed above and it tested. We might get a little bit of buying, but I wouldn't be surprised if this pulls back closer towards maybe even the 115, 116 level is something to look at. If you do get a pullback down towards the 100, 110, that would be just an absolutely great buying opportunity on Nvidia. I doubt. We might probably be getting more towards the 115, 116 level is where I think we could turn out if QQQ pulls to that target that I've been talking about near 470. Gamestop, as we know, is tremendously, by the way, in that article that got published, this is the article I'm talking about on E-Trade, Robinhood, and imagine 24 million accounts in Robinhood. Guess what their biggest holdings are? Tesla by far is their biggest holding, but they also have stuff such as GameStop. They also have stuff such as, Nvidia, Meta, GameStop. Those have done quite well. Nvidia has been up 160% for the year, Meta up 40%, GameStop up 40%. So this article was about saying that the retail stockholders at Robinhood, these 24 million retail stockholders, have actually done quite well because Robinhood publishes their core account holdings, and the bulk of them, and turns out that these shareholders also have a buy and hold mentality. They don't just do day trading. They tend to buy good stocks and just hold them, and the end of the month, they look at adjusting, increasing things that are not doing well. So Tesla in particular, they've been adding, and I'm now next going to transition to show you where I think the Tesla stock is headed. So before that, let me finish off with GameStop. I think this is a classic pennant formation happening with the highs kind of getting lower and the lows getting higher. So this is declining trend line to the tops and a kind of upward sloping trend lines to the bottoms. So this kind of a pattern is also a volatility squeeze. You can see that the volume declines as this kind of shapes up. Not sure what could be the fundamental news, but we do know that Ryan Cohen, their CEO, has raised over $3 billion of cash recently with selling 2 secondaries. First time he raised close to 933 billion, and the next time he raised closer to 2.1 billion. So between the two, 3 billion of cash that was raised on the stock. Right now, its market cap is closer to 10 billion. So we're talking about, I think, and then he already had $1 billion of cash before. About 40% of the stock is in cash. So any kind of moves of what he does with the cash, if he just holds it in the treasury like Warren Buffett does and keeps earning that 5.5%, that's a decent cash flow that can help run his business. He's got no debt. And also, if he's been actively doing cost management, efficiency, he's been cutting down stores that are not profitable. He's been improving the cash flow out of the stores. And if he shows continued fundamental improvements on there, and he's working on some product, there was some articles out there that he's hiring developers. He's asked them to work directly with him. He's got some ideas that he's going to kind of bring out. And remember, he's the founder of QE, so he knows how to make successful companies grow and kind of do very well. So Chewy, of course, was his brainchild, has been doing still extremely well in the niche of pet products, and he could have something up his sleeve with GameStop, and be something interesting to watch, and this could definitely cause a breakout. My measured target on this is much higher, by the way. I think if this does break out, this is in many ways is just on the smaller term chart, 10 to 65, that's 55 points. So breakout above 65 measures to 110. That's the 100, 120 was the previous all-time high. So at minimum, it could go there. And from there, I think a breakout to take it to 200. So that's what I'm watching on GameStop as the eventual target sometime later this year to next year. So I want to talk about Tesla and Amazon. Both, I think, are setting up. These are both two core components of the discretionary XLY, the discretionary spider. Tesla has got a beautiful ascending triangle pattern. 199 is where the resistance level is. The lows are climbing from 138 to 167. It tested twice. That 167 is in many ways is kind of a double bottom test. And now it is poised to break above. Fundamentally, I don't see why it could not. Elon Musk got his pay package approved. He's got this robo taxi plan. He's got plans to do this humanoid robots that could get tremendous amount of additional revenue stream for Tesla. And he does eventually plan to launch his, the Tesla Model 2 that will take the sheer ramp up of EV sales, get a much larger share of the internal combustion engines, and see people buying more electric cars. So there's a good chance. Market is extremely bearish. So that's also the contrarian view on this. And the measured target, if that does happen, by the way, is close to 260, 258. So I think this year's contrarian play could turn out to be a Tesla. And it's also got a bit of an election spin around. He's been making some deals with previous President Donald Trump. If there's a chance that maybe Trump comes back into power, it's an absolute breakout move for Tesla. It could be very good for his stock, very good for his company. And that's another thing to be watched. And so for those looking at a contrarian play, many hate Tesla. Many feel that, the prices are just not justifiable. The range anxiety, people like this winter, we've had folks in Chicago stranded. So many are very bearish on Tesla. But I think when people are fearful, as Warren Buffett says, that's when you buy. I know Warren Buffett has not invested in Tesla, though he's invested in BYD, their Chinese competitor of electric cars. But Elon Musk has openly invited Buffett to look into Tesla to buy it. Warren Buffett is, of course, not responded to that invitation, but doesn't have to be Buffett buying this. It's just the retail investors, as you can said, bulk of the Robinhood investors own Tesla. It's the largest holding. And if institutional investors warm up to the retail and realize that there is really true potential in Musk and what he will do for the company, Kathy Wood has been extremely bullish on Tesla. Her forecast for Tesla is closer to 2,000 or 3,000, like could be a $20 trillion stock by 2030 and 2035 is her prediction. So if they really rule the EV industry, anything is possible. With that, thanks for listening. It was an interesting session. We talked about, to recap, what happened in the market between the three key stocks, the $3 trillion stocks, Nvidia, Microsoft, Apple. At the end, Microsoft won, turned out to be the top market cap, as it has been for the last few months, over 3.3 trillion. Apple and Nvidia very close to each other, closer to the 3.1 trillion. Apple is number 2, Nvidia is number 3. We'll see what happens by the next few weeks. Do expect a market correction to continue with what started in the couple of days of sell-off with Nvidia triggered pullback in these semiconductors. So expect a bit more downside in QQQ closer towards the 470 level. And if that does happen, maybe it will be going buying opportunity because the upside on QQQ is still towards 520. So 470 to 520 would be a 50-point rise. A classic 10 to 12% gain wouldn't be a bad thing whatsoever. Do visit our blog site. That's what we share, daily blogs. And if you subscribe to it with your email, it's free. You will get emails as soon as the blog gets posted. And then we will be posting this video shortly in our Charts Are Fun YouTube channel. Thank you so much.